Hey Alan, this is Ryan with TrendLizard.com. I hope you're having a wonderful weekend. Thanks for the email. I'm going to take a look at those three tickers for you that you sent me. They are Hyliion, I think is how you pronounce it, HYLN, Microsoft, and Apple. I did a video on Apple just earlier today. I'm going to update that for you in case you didn't catch that one hitting my YouTube feed. But we will start with Hyliion here. It's a very new stock. It was incepted back in early 2019. Basically didn't do anything until the low that was recorded in March across the market, and since then has obviously had some action to it. It had a very large advance going from about 10 to 60, and then has given a large portion of that back since late August and is now trading at $18. So obviously two moves here. The first one to the upside does look like a five-wave advance into that 2060 high. You can see that five-wave labeling there. The first and second wave are kind of small, but nevertheless they fit as a first and second wave, a very clear third wave up, a very large fourth wave pullback, and then a fifth wave advance into that high. Since then, things have obviously changed very quickly, and it's done some things that I personally don't like from an Elliott Wave perspective. From that high, it's reversed and given us a large pullback that appears to have retraced or has retraced significantly more than a 61.8% retracement, which would have happened at about 28. Obviously, it's trading quite a bit lower than that now at 18. So it's moved below any notable support that I can find. In addition to that, it has given us a five-wave move. So I don't like that as well. If this was just a counter-trend pullback, should have been a three-wave move, should have found support around the 61.8% retracement. Instead, it's broken down pretty firmly, suggesting that this is a more important reversal, and therefore it's hard for me to be bullish on HYLN. Let's zoom in and just look at this down leg here off of August high. This is that five-wave move that I was referencing. You can see a nice 1, 2, 3, 4, currently in a fifth wave decline. Now, it may be closer to a intermediate low. Once this fifth wave completes, we certainly could see a much larger recovery into this yellow Fibonacci retracement zone here, which runs from about 33 up to about 43. So that could be a pretty nice bounce. But at the end of the day, if you don't own this guy, I certainly would not, because it looks like it's in a downtrend now. There's no good reason to be bullish on it on any larger time frame. If you get a move above 2375, that would be a good indication that you're heading up to this area. Obviously, a move to 2375 takes a pretty substantial gain just to get up to there to indicate that a low is in, and in the meantime it could head quite a bit lower. So it looks like a pretty risky play for me. If you're not owning it, I would certainly wait at least until it moves above 2375 to have something bullish on the Elliott Wave pattern that justifies owning it. Otherwise, I'd stay away from it. So that's my take. Doesn't look great from an Elliott Wave perspective on HYLN. So next, let's go ahead and take a look at Microsoft. I think I might have analyzed this one for you before. Obviously, it's an absolute stud. It's been in an uptrend since its inception back in 1986. Gave us a very large five-wave advance into the 2000 high, and then, like the overall market, gave us a very large counter-trend three-wave pullback into that low in 2009, and since then has been in a large uptrend. So overall, very bullish. Microsoft remains bullish. Let's go ahead and zoom in and see if we can't figure out some more information within this advance off the 2009 low. So here it is. It looks like a five-wave move that is not yet complete. The concern is that it could be getting closer to a third wave high. When we get that third wave high, we're going to expect a larger fourth wave pullback to counteract this second wave pullback that happened back in 2010, 2011. You can see back then it was a pullback. Price basically headed sideways for nearly 2 years. So if something like that happens, that would be a concern as far as holding a position that's not really doing anything for you for 2 years or somewhere in that time frame. So that is the concern. The question is, has that third wave or that fourth wave pullback begun yet, or are we still in the final movements of that third wave advance? Let's continue to zoom in and see what we can figure out here. Here's the advance off the 2020 low. So the potential is that that large third wave advance could have completed in August, giving way to that larger fourth wave pullback now. It's hard to say at this point. So far, the counter trend pullback off of September's high, for one, is very clearly a counter trend move. It's moved dead sideways, and it stayed close to the high. So in that respect, the potential for it to continue higher sooner rather than later definitely continues to exist. It would take a move below 170 to indicate that it's a larger pullback and that this is in fact that larger fourth wave correction. So that's a level to watch. Obviously, that's pretty far away. On a shorter time frame, there's no good reason to think that this counter trend pullback has ended. It moved a bit below 210 recently, which was the level that I gave either you or whoever else had requested this to indicate that it's still in this counter trend move. By all measures, we have to think that it's still in this counter trend move, and that means that we can still get a larger C wave down to complete the ABC pullback, and it would make sense for it to move into this yellow area. Of course, in 2020, we haven't seen a ton of sharp ending patterns to these counter trend pullbacks, so there's no guarantee that we're going to get some type of sharp counter trend pullback to end it, but that potential exists, and until there's an indication that this counter trend pullback is over, there's enough reasons to be cautious because, again, it could be the start of a much larger fourth wave pullback. Even if it's not, there's no indication that this is over yet. So we got to be careful in the meantime. I would stay away from it as far as buying or entering any new positions on this guy until it's clear that this counter trend pullback is over, because it could morph into a much larger multi-month or even multi-year fourth wave correction until there's an indication that this is over and that it's going to continue higher sooner. So that's what we're looking at on Microsoft. Let's take a look at Apple. I did take a look at Apple for somebody earlier today, but I'll take a look at it for you as well. Same type of thing. It was incepted back in 1984. It chopped around until late 1997 before embarking on a large, beautiful, trendy advance. Since then, it gave us the first wave in the late 90s, a second wave pullback into the 2003 low, and since then has been in a very large third wave advance. The concern that I have is that it does sport a general five wave form, as you can see, which could mean that this large third wave advance has completed and a much larger fourth wave pullback has begun. So that is a concern. So let's go ahead and zoom in on Apple. If we take a look at the advance off the 2013 low, which is just this advance, which would be the fifth wave of wave 3, again, we can see what looks like a potential completed five-wave move. You have the first, second, third, fourth, and fifth wave. And then on a shorter time frame, if you just look at that advance off the 2019 low, again, you have a five-wave move that's fairly obvious that jumps off the chart. So on several longer-term time frames, it's impossible to ignore the potential that larger five-wave advances are completing or have completed and are therefore going to give way to a much larger counter trend pullback from here. Again, it would be a larger fourth wave correction, basically a correction of the entire advance that began in 2003. If that's the case, Apple wouldn't be a good investment for quite a while. At that time, it took 2000 to 2003, basically 2.5 years or so to complete. That would be similar to what we'd be looking for in that fourth wave pullback. So that is the concern. Again, we have these completing five-wave advances, so that deserves our respect. So if we zoom in and look even closer and look at the advance off of March's low, again, we have a very clear five-wave advance that looks like it completed in September. Since then, we've had a sharp down leg and a sideways move since then. So the opportunity is certainly there for a larger pullback. There's no good indication that this counter trend move has ended, and as long as that's the case, it's kind of tough to buy. I know when you see Apple move so much higher, especially earlier in 2020, anytime you get a pullback, it's like, hey, there's a value there. It's a discounted buy, but it might become quite a bit more discounted. So I think we need to be cognizant of the very real possibility that a larger pullback is going to form before Apple is complete. So let's go ahead and zoom in on that pullback off of September's high. Again, a sharp down leg, choppy sideways move. No great reason to think that this pullback is over yet. A move below 116.75 at any point indicates that it's not over, and you would have to expect a move back down to September's low from there. And so that's a key level to watch. If you own Apple currently, only own it as long as it's trading above this level. If it moves below that level, then it opens the door again to a much larger C-wave decline and a much larger fourth wave pullback as we looked at on the longer term time frame. So that's the deal there. Again, if it is a larger fourth wave pullback, it would point down to the 54 to 87 area. which is very substantial from here. Obviously something you wouldn't want to sit through as it goes about its business. The caveat that I'm going to put into all this, like that I did in the video earlier today, is the possibility that maybe Apple, the clear 5-wave advance off the 2019 low is actually something more like this, where you have the first and second wave, and we're still in a large third wave advance, just with some large subdivisions within that third wave advance. If it stays above 116.75, this will maintain a potential. This potential will exist, that it's going to continue higher. But as is, I'm just not seeing a great reason to buy it right now. I'd be more careful until there's a clear indication that the pullback off September's high is over. And if that happens, then you can go with a labeling like this and feel more confident that it's still going up right now. Until that happens, the risk of a much larger pullback off of September's high will exist, and that's just something that we have to respect. Otherwise, at best, all we're doing is flipping a coin and hoping that it works out in our favor. So I hope that's helpful, Alan. Have a wonderful rest of your weekend, and we'll talk to you soon. Take care.